So are the latest reforms enough to right-size Beijing's biggest economic challenges? Let's bring in Dewardric McNeal, Managing Director, Senior Policy Analyst at Longview Global. Dewardric, great to have you with us. Off the bat, a lot of analysts are saying this is just not enough. And when it comes to allowing mortgage rates to be lower and cutting the down payment, the Chinese consumer doesn't have the wherewithal or maybe the confidence to even go into the property market. So what does this actually do in your view?
Yeah, it's a good question, Melissa. First of all, thanks for having me. Listen, there's data that suggests that China needs about 2.1 trillion with a T dollars to adequately address the problems in its property sector. That's unsold, undelivered units, unfinished projects. This is a $42 billion fund, Melissa. So that's a large delta. And so that leads to my next question, and that is, given that 42 billion won't be able to really suck up the glut, how will they determine who has access to this $42 billion? Will there be some sort of a national guideline to determine that? Will each locality be allowed to put in place their own criteria, leading for some uneven application of the policy, perhaps even some rent seeking? So there's a lot of unknowns in the policy specifics, but that's the bad news, Melissa. I do think there's good news here. The good news is the policy signal that this sends. The policy signal here is China realizes that this is not going to go away without significant intervention. It is shown that the central government is prepared to course correct after a long period of time, perhaps, and that they can be innovative and creative in their policy approach. And I think the affordable housing angle to this, Melissa, is really creative. There's a real problem in China with quality, affordable housing, particularly in its migrant sector. So devil's in the details about whether or not this is enough. I'm doubtful, but I certainly think the policy signal is positive.
The other possible piece of this puzzle, Dewardric, is Beijing announcing a 1 trillion yuan sovereign bond sale, only the fourth in the last 26 years. And the purpose for this sale is not disclosed. It could be for anything, basically. Do you think that this feeds into some sort of package, some sort of rescue plan, some sort of possible stimulus? President Xi did talk about the consumer that needed some help.
I hope so, Melissa. I think what it says to me, again, is that there's a real desire to course correct. Again, it took a while to get here, but this says to me that they're getting some powder ready to do something big. And I think needing to do something big has probably finally hit home to Xi. You know, for so long, the narrative was it's all about national security. It's all about national security. Well, we're starting to see that perhaps the economy does need some attention. I think this bond fund is another example of perhaps getting some powder ready to do something big.
Hey, Dewardric, it's Tim. If we can oversimplify, though, you say course correct. Are we talking about something cyclical or structural? Because to me, for China, we're still wondering whether they're coming back from COVID. So if you're an investor, and I understand there's also major corporate governance and geopolitics at work, but ultimately, if you tell me this is just about a return from COVID, I'm in here all day long because it's going to happen. It's going to happen at some point. The fact is, China had decent industrial production numbers this week. Their CPI, which you want to go higher, by the way, actually showed some signs of life. So I'm an investor. I'm concerned about the geopolitics. I'm concerned about Big Brother taking out their biggest tech companies. But ultimately, should I care whether China starts to grow a little bit now or they grow a little bit more next year? In other words, or are we saying China's going to grow at 1% in perpetuity? Because that to me is really what it comes down to, especially if you want to make a medium to long-term bet investing in China, which I think a lot of investors do. They don't need to trade it actively, but they want to make a call. This place is unloved.
Yeah, it's a good question, Tim. Look, let me say, I think where we are right now is still trying to figure out how you put in place a structural turnaround. The real estate sector, to me, this is about stabilization. It's not where growth is going to happen. This sector is not going to ever be the growth driver anymore. But what is that new growth driver, and how will we make these structural adjustments in the near term? That I think is still up in the air. And you've often said this, Tim, and I agree with it. It's not just growth. It's how you grow, where you go. So this top line GDP growth, 1%, 2, 5. You know, the real question is, what is the long-term growth driver? And I think we're still trying to figure that out.